Good evening, ladies and gentlemen. Welcome to another episode of Emkay Alpha Mavens. We'll begin in about a couple of minutes for a very special topic and a special guest today, one of the most experienced bankers. So with us for a couple of minutes for people to log in, and then we'll begin with today's episode.
I must tell you, Sampath, I think once this whole event started flashing around, I think a lot of people who you and I know, who probably we've not been in touch with for years, they reached out to me saying that how can we register for this
Same
session?
here.
Yeah,
Same here.
just brought back a lot of memories here.
Same here.
Right, so it's about 5:32 and we begin. So ladies and gentlemen, welcome. I'm Sankalp. I represent PMSEIF World, and in today's episode of MK Alpha Mavens, we have Mr. Sampath Kumar of HDFC Bank with us. Before we introduce the guest today, as we usually do at this point in time, let's introduce the topic because the topic is very special and very important to understand from the point of view of where India as a country and India as a investor is, or Indian demographic as an investor is. We're calling it Wealth Manager for Bharat, applying technology and knowledge to cater to different needs of different investors. Before the call, we were discussing amongst ourselves, while 65% of India's people reside in Bharat, what is more colloquially known as Bharat, that is beyond the metros. They constitute very little of what equity mutual fund AUMs are. I mean, we take mutual fund as a proxy for investments in general. So today we will learn from Sampath how HDFC has effectively built a franchise and how what kind of knowledge they've built through their diverse operations across the geography of India, and how technology has helped them in the last 25 years that HDFC has existed as a bank. So let me do the quick set of introductions that I usually do at this point in time. We'll start with Mr. Sampath Kumar. Mr. Sampath Kumar is an HDFC veteran, if I can use that word. He started his HDFC journey in the August of 2000. He's got about 25 years of experience. Right now, he heads NRI, domestic and overseas business, and a lot of other verticals are appointed to him as well. He led the bank towards the pole position in FCNR bond collections in 14, and that charted a new trajectory for the bank in India. Mr. Kumar has led a lot of other such initiatives internally, that we might come to know, might not come to know, that has given HDFC Bank the shape it is today. Joining him are Vikas and Sachin from MK. Vikas is of course the CEO of MK Investment Advisors. Vikas is a veteran is an asset management professional and is a veteran at that. It's about 25 years of experience. He has headed AMCs like JP Morgan, Inam, and he was during the transition of JP Morgan to Edelweiss AMC. He was at the helm of affairs of Edelweiss. He also was a member of a lot of SEBI and AMFI committees on mutual funds. Sachin is the fund manager at MK Investment Advisors and is the author of an investment framework called Equal. He has about 20 years of experience in capital markets and has worked with top investment professionals. He manages the PMS and AIF funds at MK Investment Advisors. The last set of introduction that I want to put across is FinLearn, who will be sponsoring our best question award today. So keep putting your questions out there to us. FinLearn is an online academy to learn about investment, trading, and everything related to the markets. So you can visit, and if you want to learn about investments and trading. It's a great opportunity to ask some good questions and take a free course from them. So over to you, Vikas. If I have missed any introductions, please please fill in for me. But I think I have done them from my side. I have introduced the topic as well. Over to you, Vikas.
Thank you, Sankalpo. Just one small correction. It's more of a compliance correction. I represent MK Management Limited, not advisors. I think it will just completely change the texture of my
Yeah.
organization. So I thought for the record, otherwise my compliance guys will just call me up. But as is customary, it is my privilege to introduce the guest, the person behind the professional, and it's always good fun. When I talk to people around the guest, and this has been particularly interesting. I know Sampath ever since his days as a relationship manager in Chennai, and at a personal level, it gives me great pride to see how he has grown within the system. Today, he heads teams. So when I was talking to his teams, his colleagues, I also talked to a few people in the competitive space. A few adjectives which are used to describe Sampath. Superb individual. I wish someday my team also says this as many times as I heard it about you. Sharp in all respects. Apparently, you have the ability to cut through data overload and take quick decisions, even if they're strategic. This is very impressive. Your team vouches for the fact that you're a complete team player, and you're very particular about the teams working for the greater good, and everybody should know about everything. In fact, your team mentions to me that you have the teams back at all times, which makes them focus more on important things which they need to do rather than worry about any political thing happening back in the office. You're extremely protective about your team. You will take up cajoles with anybody who dares pick on your team unnecessarily. But what gets you irked is when you find people working in silos and not keeping each other informed. Because, like I said, you believe in teams working for the greater good. One thing I loved about people talking about you is you're a chilled out boss. You're respectful of people's time. You expect people to spend time with families. You expect work-life balance. 7 p.m. pens down is what somebody said, which I loved. You're a typical Leo in a lot of ways. You're the live wire of any party. In fact, the word magnet has been used for you. You have an amazing voice. I didn't know this, but I believe you do brilliant renditions of S.P. Balasubramaniam's songs. That's quite amazing. You're outgoing, you're an extrovert. One thing I know for sure that you have an absolutely devilish sense of humor once people get to know you a little better. You respect humility, but if somebody tries to act like a smart aleck in front of you, you can turn the same devilish sense of humor into dripping sarcasm and cut people down to size. People love the fact that you're a fitness freak, very high energy. You run, you play basketball, and I didn't know this. You've been a Ranji player representing Karnataka, a right arm fast bowler. Amazing. You're also a great golf lover. You're a complete family man. You're a loving husband to wife Priya, who's a working professional, and a doting father to son Ritesh, who's 23 years old. And from what I hear, he seems to be a chip of the old block. You're an extremely devoted son yourself. You love to travel. In fact, you will be described as a travel freak. And the last one, which I really loved, is that your unconditional second love is beer. You're always ready to be with one. So thank you so much, Sampath, for gracing the show. It's a privilege having you here. So let me just start the ball rolling, Sampath. I think Sankalpo touched upon it in a way, but considering the topic, I just want you to help me set the perspective for today's topic. Just take a few minutes to give us an insight how Bharat is viewed differently from India from your bank's perspective.
Okay, firstly, Vikas, thanks for the opportunity given to me and that wonderful introduction. So, myself, am I able to?
Your voice is cracking a bit.
Is my voice coming? Is my voice still cracking or?
Now it's better. So you can compliment
Okay.
me again. It's fine.
Yeah, I'll re-compliment you for those research that you have done. Again, thank you for this platform, and I think it's an apt topic that would entice me to talk about when we are talking about Bharat versus India. So let me cut it across into the banking parlance. like the way our industry talks about B30 and 330, the segregation which the Reserve Bank of India does is between metro, semi-urban, rural classifications of the bank. The geographies are classified that way. Just to give you how it pans out, I have some numbers that can actually be useful for understanding. The total deposit ratio for the SCBs, which are the banking segment across the T30 top 30 cities, is close to about 70 lakh crores. And the mutual fund penetration, if I have to take a standalone asset class, which is mutual fund, which is a widely distributed passive investment style, is close to about 23 lakh 75,000 crores. So if you see, it is a 35% penetration. But if you shift a little bit towards the D30, which is beyond these 30 cities, the total balance sheet size is about 72 lakh crores. 72 lakh crores is the deposit size across all the banks. And mutual fund penetration is hardly 4.5 lakhs. So we are talking about 7% to 6% penetration. Even if I cut the population by institution to individual investors, if you see the deposit percentage in top 30, it is 50-50. Institutions and the individuals have equal share in the deposit space. Similarly, in the mutual fund space. So if the individual penetration is about 30%, the institutional penetration is about 37%. Here and there, tad because skewness in the volumes. But if you see the same thing on the beyond these 30 cities, it totally changes. The institution who participate in deposits are less than about 3%, but individuals have 7%. But if we go further, in the last couple of years, thanks to the regulator and the SROs and a lot of people like you, manufacturers, who are increasing the financial literacy in across places, a nice data point that will actually shock all of us. If you see the total T30 equity AUM and how much is the individuals contributing to it, it is close to about 74%. But if you go to, it is not less, it is 50%.
Interesting. Very interesting.
And the current scenario, the way the digital transformation is happening across the length and breadth of the country, we have seen a lot of participation happening from the semi-urban and the rural areas of the country. So if I have to give you the statistics about my branch footprints, I have close to about 5,900 branches across the country, out of which 3,900 branches are in the semi-urban.
Amazing.
So I used to make this statement to most of the other discussions. My ex-CEO always used to say, if 60% of the population is residing in this particular area, do you think you're going to get 30% year-on-year growth only from the metros? So, chalo Bharat mein chalte hain, kaam karte hain. So that's how we started our journey entering into the rural way back 15 years. We reached out not only into individual space, but we have gone through panchayats, we have gone through municipal corporations, engaged them to ensure that the customer gets banking facilities. Though now with the Reserve Bank of India giving a lot of clarity on banking correspondence and banking facilitators, this space is more expanded. And along with the government initiative of CSC, the village level entrepreneur has expanded and exploded big time. So whoever thinks that we have to be present only in metro and eat the 85% share, where we are not trying to expand the pie and just eat the share within the pie, I think we are missing the big buck. They have to move. They have to move towards the other segments. It is not the tier 2, tier 3 cities. You'll be shocked the way we have done analysis that the kind of we get participation into asset classes, not only mutual funds. The participation in asset classes, like places in Tirunelveli in Tamil Nadu, is humongous. So
Amazing.
my only thing is look at India completely like a Hindustan, which is divided into India and Bharat.
Beautiful.
Reach out there. You have a huge potential over there.
Beautiful. In fact, I remember quite early when I was talking to somebody very senior in your bank. They said that this footprint which you're talking about. He described the mindset as being the best private public sector bank. That is where you were going. So I think you're just echoing that. Beautiful. My next
So the
question
only
was
difference which we created, sorry to interject,
No, no, no problem.
the only difference we made in being a private sector bank entering the public sector space is we defined the best tax, the seamless products, and the transparency and the trust. And that's what we need. So I was there. So just to give an example, last quarter results also you would have seen of the bank. HDFC Bank contributes to about 30% of the credit participation in India.
Yes.
And
Yes.
of that, the rural credit offtake is close to 46%.
Wow. Amazing. Amazing. You talked about your penetration levels as at a banking industry. You talked about the overall demarcation of Bharat versus India. I love the term you use, Hindustan. Hindustan includes India and Bharat. That's a very nice way to put it across. At the bank, what is your primary driver to set up a digital initiative? How do you think? Is it something which is a very obvious or latent customer requirement? Is it something which is getting disrupted in the environment? Or is it something that the competition has done and you have to keep up with it? So what is the trigger, primary driver to set up a digital initiative at the bank?
Okay, so our digital initiative is not a the recent innovations that we have been doing. We started providing seamless facilities to the customers through our net banking and mobile banking way beyond. If you look at some data, every third check that hits the registrar, that used to hit the registrar, used to be HDFC Bank check. So that means my banking facilitation has been extensively used by the customers. I'm one of the largest customer base of banks in the private sector. I've closed about 70 million customer base. And if I still believe that paper is the solution, then I'm going to miss out.
Yeah.
It has nothing to do with post-COVID, even pre-COVID. If you see, we had launched our online investment services through our net banking in 2007. And that time, I think we should be approximately 60 to 65% digital execution, and 30-35% used to be physical. But today, I'm very proud to say that I'm 96 to 97% digital. All transactions are digital, barring some institutions who would still want to participate through us. They do a little bit of the historical way of execution. But 95 to 96% is entirely digital. What makes this a offering? At HDFC Bank, we have one clear motive, which is customer first. What does the customer need? And how does he need that? So the customer needs ease of execution. And today, if the industry is now getting into demographics, which is actually dominated by the new millennials, they need everything in one click of button. So if I am able to provide a doorstep seamless execution platform with a complete research-based solution to a customer, the customer will be a ring-fence customer across all deliverables of the bank.
It just stays within your ecosystem.
Challenge which we have, the biggest challenge today we have more than 70 banks, and each and every bank has strength of their own.
Yeah.
The customer today, if he has to be with me, I should ensure that I have a largest share of wallet of his. How do I do that? Like I was explaining to you some days back that in the banking parlance, I'll not be able to talk more than 2 minutes about a CASA product or a credit card or an auto loan or anything. So my engagement tools which are there are more from the investment style. So there, if I give him the exact ease of execution, sitting at home, executing it, post-execution, give him the analysis part, give him the reports part, give him even unfettered access of withdrawal. All that put together was the motive we started our ISA, which is the investment services account. And I think we are very happy that our digital platforms are still so even now we are in the exploratory manner. It's not that we started 2007 and we are stuck with that. The problem with digital transformation is every new invention becomes rudimentary in the next 15 to 20 days because a new guy comes and replicates it at a cheaper cost. So that's the mantra
Absolutely.
of digital disruption. So
Absolutely.
we are also on the toes. So we are doing a lot of ongoing development, enhancement, and so on and so forth. So you'll listen more about us in the coming future also.
Very interesting. Sachin, you
Yeah,
want to ask a
sure.
few
So,
questions?
thank you. Thank you, Vidar. And thank you, Sampath, for being on the show. So, just taking the same trail from there. So, when you look at your business, is your perspective of going digital is to enable the business and create convenience, or is it to write disruption and create stickiness?
So it is not to enhance business. So when we entered the business way back in that is the time we started earning market share. The market was always there. I had the customer base, I had the market share, I had the products. But if I was not getting into the arena of digital offering, uh, I would have lost the customer. And if I lose a customer in being a bank, I'm not talking like a independent financial advisor or a hardcore distributor. I'm talking as an institution which does end-to-end one-stop financial shop. If I lose a customer of any one aspect, I would lose the entire relationship. So to ring, I have to provide a value add which is for the customer in the current parlance equivalent to what he's going to get in any other window shop. So for me, I had to move much, much faster than the fintechs. If Paytm can do it, why can't a bank do it?
Interesting.
And we use this in all our digital platforms. We enhanced our net banking facilities. If you open my net banking, it's seamless. If you open my mobile banking, you can execute transactions and so on and so forth. So we are using this tool to add value to the customer rather than garnering business. Business to aata hai rahega. I have given the Mercedes Benz चाबी भी दे दिया लेकिन मुझे डीजल नहीं डाला तो गाड़ी आगे नहीं चलेगा. So the diesel is basically my digital platform.
Wow, perfect, perfect. Just one more thing that I was thinking. We were talking about Bharat and India, right? So, and you also mentioned about how underpenetrated Bharat is when it comes to investments. Uh, but obviously, every investor, whether it is Bharat or India, or I would even think globally, uh, needs an advisor, right, to channelize their investments. So, in your experience, the relationship manager or the advisor, how different he is for India versus for the Bharat, considering the different profile of people. That's one part. And second part is how has the overall technology empowered the advisors or the relationship managers for both Bharat and India, I would say.
A good question. So I will split this in two parts. Different are the people for the I up
Sorry, Sampath, your
whether it is
voice
a
is
person who is
your voice just cracked up. If you can,
am
if
I
you don't
audible
mind
now?
repeating. Yeah.
Yeah, I don't know. There's some fluctuation. My apologies.
No.
So I was saying that we do not differentiate the quality of relationship managers across the length and breadth. The reason being, I approach whether the customer is from Kanyakumari or from Kashmir or from West Bengal or from Goa, an investor is an investor. He's dealing with something called the vitamin pa, paisa. Vitamin pa he deals with. It is hard-earned money. My advice or my relationship engagement architecture cannot be diluted between these guys. It is not that I'm going to give, might be the degree of advice on a particular asset class might differ from individual to individual based on the risk appetite. So that is where we strongly believe that running an investment quotient needs to have process orientation in the front, in the mid, and in the back. For an example, in HDFC Bank, a customer onboarding that we do, whether he is from anywhere, is only done based on his risk profile. The customer is segregated as conservative, moderate, or aggressive. It is recorded in the backend, and the way we are mandated by the Reserve Bank of India to do the re-KYC for high, medium, and low, we do revisit in the same frequency and interval on doing the re-profiling. That's point number one. Point number two, the entire stream of our relationship management talks one language. They are not allowed to talk something which they think they suddenly become, Mark Mobius. So I have a unified central research desk that cut across all recommendations across all asset classes. And that is what is put out for the delivery mechanism or the execution for the customer, which is again audited based on the post facto, whether the right product and the suitability of the customer matches. And believe me, though people might think that we are a softer bank, we come very heavily on any errors which happen in that space. That is technically proven by the data with the Reserve Bank of India. Reserve Bank of India takes a lot of data on mis-selling. So if you go to AMFI or SEBI or even the RBI data, you would not see not even 0.01% complaints on mutual funds. The second is on if participate something which the RM has said, which is not in my ecosystem. When the execution platform happens, there is a prompt that comes to him saying that this is not recommended by the bank. Do you want to execute on your own? So I'm ring fencing, because tomorrow if the relationship manager or the person who's touch point of the customer starts talking something, it is not that Sampath Kumar as a RM is reaching out to Vikas or you. It is HDFC Bank that is reaching out to Vikas or you.
Correct.
The credibility of the bank is at stake. So process needs to be very robust. Process needs to be re-engineered on a regular basis, and it is to be monitored. And that is one thing which is the core DNA of our bank. The third part, we as an institution, even in the research gamut, we do not indulge in situations or in places or we don't understand.
Can you repeat that statement again? Can you repeat that statement?
So as an institution, we do not indulge ourselves in market, in businesses, or any practices which we don't understand.
Okay.
So that is a reflection in my balance sheet on my NPS. If I don't understand infra, yes, I don't understand. So when I don't understand, I don't lend. Similarly, my credit appetite, which is there, the risk parameters that we have benchmarked for our core organizational values are replicated on my research desk also. So that is why, fortunately, I'm not trying to take this platform to boast or promote HDFC Bank, but I have not taken a single exposure in any of the credit risk papers.
Wow.
So my investors didn't have to see the Economic Times or the other papers to see what was going wrong with one of the fund houses which had a huge problem with higher credit exposures. It is purely because of process and process and process. I hope that answers you, Vikas.
Actually, I think you, while answering Sachin's question, you actually preempted my next question, but I'll still ask you nonetheless. I think this is what I have seen, and I don't know whether you'll agree with me on this, but nonetheless, post-COVID investor risk appetites have gone up dramatically. Okay, I think we've seen pre-COVID, we've seen COVID, and we've seen post-COVID. And I'm not benchmarking during COVID, but I'm saying even pre-COVID, there was a certain X amount of risk level, risk appetite. It has now dramatically gone up. You did mention in terms of your processes, how you deal with investors, but how has the investor-RM relationship evolved? I'm sure your RMs are going to be under a lot of pressure by the client saying, "Ki itna conservative kyun ho? Why don't you do that?" How do you deal with that, and how do you mitigate any issue which might arise?
So It's a simple mantra, whether it is current situation or pre-COVID. Whenever you on, you always audio or break out.
I'll ask you to repeat, in case you crack up, I'll just ask you to repeat. Don't worry.
Yeah. So the basic mantra which we followed since the day we had created this part of the institution called the wealth space, we said that we are not going to chase returns. We are only going to follow a simple mantra which is called asset allocation. I might talk to my competition because of the 200, 300 basis points of additional return that the customer might get. But I would strongly believe in asset allocation, rebalancing, and consistency. That is why on the back end, as I explained to you earlier, we do suitability checks. In the pre-COVID scenario, things have changed a little bit, but not from an asset allocation, but a lot of new asset classes have come into the customers' portfolios. Like the biggest flavor that started after the month of March 2020 is the health insurance. So as I was having a discussion with you, HDFC Bank is the only bank which is a true open architecture distributor in terms of not only mutual funds, but also insurance, general and health, and also the alternate assets. Alternate assets in the current parlance cannot be done by the bank, so it is done as an advisory from my HDFC Securities, which is a subsidiary of the bank. So the customer requirements have changed. Though they are looking at making returns because of benign interest rate scenarios, but today a good quotient of their portion of money is going into coverages. Pre-COVID, there used to be annuity contributions, but now it has gone into health. It has gone into guaranteed long-term returns from insurance companies. It has gone into non-FMP rates. Yes, there is a shift between there is a lot of monetization happening on the fixed deposits and the savings portfolios into financial assets, but it is not chasing returns. It is chasing the requirement or the necessity in the current scenario the customer needs. To give you an example, across the 5 SAHI companies we call standalone health insurance companies that we deal with, pre-COVID, it was not an active, it was a me too offering kind of I also provide. But today we are the market leaders in distribution of the health insurance products. Apart from that, on a organic basis, even as an institution, we also offer value-added services like wellness programs and healthify solutions to the customers. So today it is not a discussion only about मैं mutual fund में कितना पैसा डालूं, PMS में कितना पैसा डालूं. It's about यार मैं क्या cover करना चाहिए.
Interesting.
So pre-COVID, that has become one of the most important stuff along with the distribution quotient and our RMs. So I have close to about 26,000 touch points in the bank who go and meet the customer who are certified both as NISM and IRDA. So these people go with the agenda, which is again led by the artificial intelligence, which we use very actively in our digital space. Every customer, when he is touched upon, at least post-COVID, because there is a tool called CRM. So it's actually, we call the Kundali of the customer. So in that, based on his transactional behavioral patterns, based on his risk appetite, based on his requirements, the AI and the ML technically gives me next best action. The propensity of the customer picking up which kind of product. And we give a standard narrative in that. And that is what is being given to the customer as a gospel.
Very interesting. In fact, I think you're setting the precedent of preempting all my questions. So, I was going to ask you about AI and ML, but I think I'm going to come back to that again. This is very, very interesting. What I'm gleaning from this, the last 5 minutes that you mentioned, is that a lot of people don't look at a digital backbone in terms of a risk management tool. The last 5 minutes, I've heard you use digital you've not mentioned risk, but in terms of customer experience, you've used all the other terms. But at the back end, I can sense that what you're talking about is risk management. Otherwise, you will not be able to run 5,900 branches seamlessly in a process-oriented manner if you don't do risk management. One of the questions, one of the things one sees globally is that ultra HNIs have different set of expectations, different requirements, a different sort of analytics, if you will, in terms of managing their money, which is not really visible when an HNI or an MNI transacts or interacts with the RM. So the global practices are that you take this entire data pool or understanding pool from the ultra HNIs and try to democratize it across the spectrum. So you give a much more sort of intuitive experience to the HNI and MNI segment. Is HDFC Bank also doing something like that?
A very good question, because so as I you and I was explaining first out.
You have to repeat that again, Sampath, please.
Yeah. So as I was answering some time back, saying that do you differentiate the customers? I don't differentiate the customers. It is the wealth with which I approach them. The expertise which I bring to the table is a standard approach. But do I segment the customer? The answer is a big yes. The segmentation is very clear. So if there is a non-managed customer in a bank, there are two kinds of customer. One is a customer who has a dedicated relationship manager, either face-to-face or virtual. In our bank, it is called Imperia, Preferred, and Classic, where there is a dedicated relationship manager to cater to the family, the entire family of the customer. And there is a non-managed, where the brick and mortar or the virtual part takes care. If I do the segregation, my classic customers, we have positioned the program in such a way that I will not be in a position to go and offer him a PMS product. So I do not decimate that particular expertise to that touch point. But when it comes to higher, whether it is Imperia and above Imperia, there's a private banking. There, across all asset classes, there is a full-fledged training that is being done. There is a huge product team that supports it. There is a front end and the back end, from distribution perspective as well as the manufacturer perspective, which we have put in place to mitigate risks. And we go by the learnings. I will not pick up a product which the market is consuming. That if the market says I'm going to go only for X particular product, I might not be in that space, but I will do a complete due diligence to pick a product, understand myself whether it's a product that can bring in a pinch of salt to the customer's portfolio, then take a buy-in from the system. We do a VOC, and then only we'll onboard the products. So in that perspective, when I reach a Ultra HNI segment, technically we talk about 50 crores plus and so on and so forth. In that segment, I offer a plethora of services, starting from succession planning to trust creation to alternate assets to mutual funds to and even international products in their LRS. Currently, in the last 2 years, because of surplus saving and lesser spendings, LRS money has become a big piece. If it was close to about $35 billion, now it's about $50 billion. So that's kind of money it's seen. So we are available in those spaces. But will I replicate it down the line as an offering? No. I will not go, even if it is 25 lakhs as PMS and the customer has 25 lakhs. We strongly believe that if there is a 8 to 10% requirement of gold in the customer's portfolio, if it is 12 to 15%, I will ensure there's a rebalancing trigger that goes in. I will not put all money in one basket, and that is done on the back end. Yes, the expertise are different.
I see your point. I think because you also have a holistic view of the customer. Maybe an ultra HNI customer would not have a loan, but an HNI customer might have a loan. So you need to be a little bit mindful that you cannot have one size fits all. I think that's a very interesting point that you mentioned. Very, very good point. Yeah. Sachin?
Yeah, sure. So, one of the things that we have actually seen is that, the private banks were very, very service oriented, or I would say very customer centric, right? and obviously they have gained market share over the last few years over the PSU banks, right? But obviously, to do this, say a bank like HDFC Bank have to really maintain very high service standards, and also if there are any customer grievances, you need to really address them very very beautifully so that the customer remains happy. How do you manage this at such a large systemic level? Like you said, 26,000, and how do you ensure that discipline?
Sachin, you are technically talking like the Deputy Governor of RBI. That's the question which comes up every time when we go meet. Complaints कैसे ले सकते हो?
Sir, apply कर दूंगा मैं.
No, your point is really valid. In the audience also, I'm sure a lot of people would have a mixed reaction for this question with my bank. Okay. Am I 100% there? The answer is no. Am I moving towards that? The answer is yes. What we do is every customer, we have started segregating the customer requirement into CQR, complaints, queries, and resolutions. What we used to do, we used to be verticalized in the complaint management system. For the last 4 years, we have now become one roof.
So you become what?
All complaints, one roof.
One roof.
One point of touch for all complaints. So any person walking into the branch or into the phone banking or to any virtual system gets a docket number. Okay? And there is a department called the Quality Initiative Group within my bank, which tracks each and every docket number with the tag. There would be certain complaints that go into disputes and then go into a banking ombudsman. That is bound to happen. We are not sulking. There is negativity. We should have customer needs. But as much as possible, if I give the customer the first resolution on the first call, I'm making him happy. And that is our endeavor. Are we there 100%? Let me admit wholeheartedly, I'm not there. But how do I do complaint management? In mutual fund, in investments. Like for an example, I'll give you the example of the process that I hold in insurance business. I'm one of the largest banker in the country. We do excesses of close to about $1 billion rupees kind of a premium. The process is when the customer is being met and there is a solicitation that happens, he has to log in an application form with the respective manufacturer, which is my insurance partner. The form doesn't get converted into a policy before a phone call that goes in on a recorded line by an independent agency explaining to the customer that this is not a fixed deposit, this is not you are buying for a locker, this is a 5-year, 10-year pay, this is the expenses and so on and so forth. Even if there is a error in the call by the customer, the policy is sent back to the sourcing channel to get the proper justification. So again and again, I might sound a little bit, opaque in this. I strongly believe all these can only be possible if there is a very well-oiled process orientation. The middleware and bottomware should be process oriented.
Got it. Just moving to a different gear, one of the trends that we are seeing now is that the customer has become more like an instant gratification, right? So, for example, when we see things like, say, online platforms or fintechs, they have been doing this mass customizing for the audience as a large, right? And obviously, the customer is loving that instant gratification, right? So, how do you manage, as a bank, to stay ahead and relevant for today's new age customer, the millennials, as they call it?
Exactly. We also. Am I audible?
No, you cracked up.
I should be back now, I think.
Yeah, now you're okay.
Yeah. So we are also in the learning process, and we are a quick learner. I'm a banker, right? But what I call myself is I'm a technology company also offering you financial solutions. So I have redefined ourselves. Just to give an example, the way Zerodha went in, though it's a discounted brokerage house, but they showed a fantastic tact in opening a broking account and a demat account.
Yes.
So we were caught unaware because we are not a single regulated entity. We are multi-regulated entity. So I'm regulated by all the three regulators, and there is a MyBAP also on that. So to cut across with all that, we also follow the process. Now with me, in 3 minutes time, straight you can open a demat account and a security account. So we are learning that. I am the pioneer in the industry. Even the fintechs are struggling to do that, including the giant like Bajaj FinServe. I have a 10 seconds TL. And believe me, Sachin and Vikas, you'll be surprised. It is not 10 seconds. We are lying. It is 7 seconds.
Brilliant.
Customer in 2 clicks gets it. And especially when you're talking about new miller, I'll give you my own example. My son has opened an account with Zerodha. I asked him why. He said, Dad, 2-click button. He calls me, buy this, buy that, over, done. I said, Pagal ho gaya kya? Kaun advise kar raha hai tere ko? He said, I'm also doing my research on one. So the current generation is totally different. So for me, I am putting a lot of info on my website. We have created a lot of microsites where we have put information that is across all relevant data that is required by the customer to read, take an informed call. Or if he is not able to do that, I assist him with one. So in the current environment, I have close to about 75 to 80 journeys that are waiting to go live, which will create the wow factor for the customer in the digital space. I have no other option. I am competing with the fintechs, but yes, that's the way the world is. So we are also gearing it up.
It's very interesting. I must compliment you on the redefined net banking page, which I'm seeing right now. It's much more intuitive, much more user friendly. I think you probably have inspired your mutual fund also. They're also going for a complete revamp in terms of the website. So I think it's very nice. One interesting thing which you mentioned, the last I heard this was probably at a fintech platform, that the difference between organizations is it's either a financial services company using technology as an enabler, or a technology company using financial services as a product. I think that mindset change is extremely difficult, which I think when I hear you, the bank has probably managed to do. It's a tremendously difficult mindset change to do. So my congratulations on that.
No, that's why because I said that I'm a technology company offering all the financial. I have to read it myself.
Absolutely. I agree with you. In fact, one of the guests I spoke to in recent couple of episodes earlier said that nowadays I spend a lot of time monitoring data analytics rather than just the P&L numbers. So it's a different world, but amazing. I think last couple of questions, at least from my side, maybe just one question. What is the exact engagement architecture we need to have with investors today? And probably a sub part of that, you already answered that, is a lot of consumer companies are using AI and ML to understand more of customers and their spending. What are you doing towards that? So 2 questions. What is the exact engagement architecture we need to have with investors today? I know there is no right answer or wrong answer or definitive answer, but I'd just like to hear your thoughts. And how are you using AI and ML? This is the data you're collecting from investors.
So that's a very come back. I'm sorry, guys. My internet is fluctuating big time.
No, we can hear you. No
Now it's fine.
Yeah. So it's a very interesting question, and as you rightly pointed out, that there is no thumb rule or no right way to attain this, and nobody in the earth can say that I will attain nirvana in this particular field.
True.
But what we tend to do in our bank, firstly, is try to when I told you that when I onboard the customer, I try to understand his requirements. and always position customer centricity and need-based selling. When we miss these two and step a little more on that, then only you start losing the engagement architecture process. Have a defined agreement with the customer. I keep telling my relationship managers also, the success that you'll get into the share of wallet of any customer is try to listen to him more than you telling him. Because today, because whether you like it or not, it is not that my age or your age, but the relationship managers are hardly between 26 to 30. But they are interacting with a customer who's 55 to 60. The relationship manager must be earning 25-30 lakhs, but the customer is sitting with 25-30 crores. So A, he's successful in his earnings. He's got much more experience than the person going to talk to. So there, what are we trying to come and position? We are only trying to position saying that, sir, we need to know what is your requirement, what can I cater for, and open out everything that is possibly there under this roof. Under my banking umbrella, I have everything. Today, if you see, I have opened up a new theory which is called the festive treats.
Yeah.
I'm offering one of the largest discounts to customers in the shopping experience through my plastics. That is also a part of wealth management.
In a way, yes, you're right.
Money saved is money earned.
Correct.
And that is the narratives that we take to the customer. If you want to buy an iPhone, I'm trying to sell to you and the audience. If you want to buy an iPhone 13 with my plastics, you are getting anywhere between 20% to 35% discount. So, proposition that you're going to come and put to the customer is very, very critical. And the process of pre-calling, during call, post-call is the most critical part of any customer engagement architecture. When you go and meet a customer, do the entire analysis about the customer. What have you spoken to him last time? What did he ask you that you're still yet to deliver? Or even if you have delivered, what have you delivered? What are you planning to talk to him in the call? And after the talking, have you helped him in execution? After doing the execution, are you doing a complete detailed analysis to the customer? And every time when you're meeting the customer, are you only wearing a tie and selling that I'm going to come and sell to you? If you move, yes, today cost to income ratios are very, very critical. And thanks to regulator that the whole earning potentials to this business has taken a different avatar. But to sustain on a long-term basis, like I keep saying, when will a customer expose to you completely? It is not going to happen the first year of engagement. It is not going to happen to you on the second year of engagement. It is only going to happen over the 3-year, 4-year, 5-year period. It is a long-term relationship architecture. He needs to have trust in you. Though he might trust HDFC Bank or any other bank. But unfortunately, you are the face. He needs to build trust. He has to break this wall to go to the next.
Correct.
In that perspective, we need to follow process again. And that is where I have to enable my relationship managers or the personal bankers to reach out, give them the same narratives, keep a watch. I need to do policing job on the back end. Customer, voice of customers are very critical. Like for an example, we do a very critical activity. Once engagement is done with a customer and the input is done on the CRM, every interaction is logged into the CRM. Once it is put into the CRM, which that is also being tracked that he puts it daily basis. It's not bunched together and so on and so forth. If it is done on a daily basis, an SMS and an email gets triggered to the customer asking him to rate the engagement.
The
1 being
NPS.
the worst and 5 being the best. So NPS is a derivative of that. So I'll take 2 minutes to cover this and then tell you what we do in NPS. So if anything below 3-star rating, the supervisor gets the trigger and the supervisor has to call the customer and understand where he can make the customer more satisfied. And this is a monitored process. And by doing all this, I'm getting into the NPS, where I'm not only going to look at the, my main agenda is to look at the detractors there.
Correct.
Whenever there is a detractor, so we keep saying that if there is a detractor call to be done, it is to be done with a feeling that you have a time bomb below your chair.
Very nice. Very nice. Very interesting.
So that's how we are trying to reach the process. I don't know, we are not so 100% there, but I'm sure we'll reach there.
Interesting. In fact, you talked about NPS, and there was already a question on NPS. So I guess you've already answered that. One of the audience questions was there. Sachin, you want to wrap up before I take up some audience questions?
Yeah, definitely. And
We're almost an hour now. We've just time kaisa gaya pata hi nahi chala. It's almost an hour now. So I'm just mindful of the time here. Sachin, why don't you just go ahead?
Yeah, so because irrespective of the time, I'm going to not leave Sampath so easy.
Yeah.
So
please go.
he is the man, and I am a great admirer of HDFC Bank and even Mr. Sampath. So I want to really know a few things. So one of the talking about the recent trends, right? What we are seeing is that obviously equity markets are on fire for the last 18 months. They're absolutely on a roll. I mean, not only India, but the global equity markets, right? But the important thing is that what we have seen is that there is a very, very good participation in the equity markets from the domestic retail investors. Like if you see the new demat accounts that have opened, so almost 3 crores in the last 18 months, or even if I take the last 6 months, right? The DIIs, the domestic institutional investors, have invested almost $7 billion, where the underlying investor is again the domestic retail investor, right? In fact, if you see the last 6 months, the FIIs are actually absolutely virtually neutral, whereas the DIIs have invested $7 billion. And at the same time, parallelly, we know that the bank, the deposit rates are actually probably at the bottom. I mean, I don't remember seeing sub 5% fixed deposit rates, right? First is that, are you seeing a shift of money moving from the fixed deposits to the equities? I mean, wherever the fixed deposits are getting matured, I have a lot of people coming and asking me, "Was we matured or वापस नहीं करना है? Do we put in equities?" So, are you seeing that as a trend? And if yes, then how big this trend is compared to, say, the previous when the equity markets were doing well, and how do you think how much sustainable is this trend? Because if you just keep a perspective, I mean, the bank deposits are about 140 lakh crore, right? As you were just saying earlier, 70 plus 70, urban plus rural, semi-urban. And a small fraction of that, say even a 2%, 3 lakh crore for Indian equity markets is a very large number on an annual basis. So where do you see this trend is actually, going towards?
Very, very interesting. And I think, am I audible?
Now, yes.
Yeah. A very pertinent question in the current situation. So let me take you I'll divide it into pre-COVID and post-COVID. This phenomenon started courtesy all our friends in the asset management business who went hammer and tong on SIPs. I think if you remember, close to about $1.5 billion equivalent of rupee was getting accumulated month on month in our SIP book.
That's right, yeah.
And that's a huge amount.
That's right.
Okay. When that started happening, the equity market started feeling very comfortable, saying that पहले ये होता था कि retailer आए तो institutional भागता है. मतलब people tend to, you forget the cycle of top to bottom, peaks to lows. But that cushion started building up.
Right.
So I would say that mutual fund sahi hai, the campaign which was done, and all the asset management company players putting more focus on creating annuity kind of products, and large distributors like State Bank of India, NJ, and so on and so forth. They created huge, ecosystem across this one product has actually helped a lot. After 23rd of March, when first time in the history of humanity we saw everybody getting stuck with pandemic, what started happening? Spending avenues had reduced and saving avenues had increased. If you see September 2020 and October 2020, though initially there was a data that was published which say that across India there are 2 million jobs that have been cut. But if you see the Egon Zenger data which was released, the total outflow of salary throughput in the banking system remained at a 9% increment.
Wow.
So though the job data went down, but the incremental money was at 9%. But the spending revenues were not there. And that is a time when all these fintech players and the discounted broking houses came into a rampant spree. They gave ease of opening an account, ease of execution, and they also attached something called no brokerage. So at no cost. That pulled a lot of new millennials. So give you an example, we were thinking we are one of the great players when we were opening close to about 100,000 demat accounts and broking accounts in a month. But when we saw the data coming from your discounted broking houses, they are opening 2 million accounts a month. So the scale is different. In this segment, in the banking segment, the senior citizen and the super senior citizen are not shifting their money into any of the riskier asset classes. But the new millennials and the baby boomers, so-called, they have started looking at a different asset class with a limited risk appetite. So we have seen a little bit. That is why if you see, you are a fund manager and you know the data very well. If you compare, 2019-20 balance sheets on the CD ratios of the bank and the current CD ratios of the bank, you will find a lot of difference in that.
Sure.
And that clearly establishes that there is a process which is underway, which is monetizing the CASA in some financial assets.
Right.
I'm only praying to and the Almighty that this continues, because what happens? These are the first timers who have come in. Most of them, they are the first timers who have come in. If the market, due to some reason, turns a little bit towards the negative side, the knee-jerk reaction about these people, I have no clue.
Sure.
But net, in the current scenario, the dependency on institutional investment to a retail investment, I think we are well balanced and well poised in the current scenario.
Just last one or two more things from my side. Obviously, HDFC Bank is the most successful bank. I don't think there is any debate on that, right? By all parameters in the last 20 to 25 years since the inception, right? If you could share, at least a few success mantras. Process, we all know, is one of it, for sure. If you could share a couple of more success mantras.
Sir, I can only take the liberty of. So I was very fortunate to work with. Am I audible now?
Yep.
Yeah.
So it has been a great blessing to me and a great opportunity to work with a greatest icon who was my ex-CEO of the bank. So there are only a couple of things which are reiterated time and again. Stick to basics. And basics are the most important fundamental rule of anything. That is the foundation. As strong you make your basics, your building pillar will be more strong. No organization runs at the board. All organizations runs at the ground. If you, from the top supervisory architecture to the first level supervisory architecture, if you don't have your ears, eyes, mouth on the ground, you will not be able to succeed.
Okay.
Elasticity for failure.
Elasticity for failure. Very interesting.
you should have the elasticity of failure, but on a supervisory architecture, you should have a two-door approach. If you are giving the elasticity failure, but when you know that the failure is going to impact you, the second door of inter comes in. You pull it back, no problem. And last important point, which we have all been taught in the DNA is, if you don't understand, don't do it.
Right. If you don't understand, don't do it.
Right.
There's
Yes,
such
but
simple.
if you don't understand, you won't.
I'm saying there's such simple things, but to consistently do it. If you don't understand, don't do it. It sounds so, simple.
Right. Sampath, just one last thing. I can't resist. If you can share one or two success stories that really make you proud.
Actually, can I just step in here? Sampath, I think you'll have tons of success stories. You won't have it difficult. You just mentioned elasticity of failure, right? Couple of failures you learned from. Sorry, Sachin. I think
No, fair point.
I think the audience will be very interested in knowing that. We all know how successful your organization is, but people think that this is a natural progression. वो success पे success आता है. क्या failure हुआ उससे क्या सीखा है? I think that will be of great use to the audience.
No, there are multiple occasions. So when in 2010 I took over the international business.
Can you hear
Am
me?
I audible now?
Yeah.
So in 2010, when I took over the international business for the bank, as usual, so I said I put up a brilliant presentation to the entire senior management and said that though we are present in 6 locations, we are not present, and this is where the actual profit lies. I'm not there in Singapore, I'm not there in London, I'm not there in the US, and so on and so forth. So our big man made me do a small exercise saying that, okay, you do a market survey and come back. So very thrilled. We did the entire market survey, came back, and we set up another time. So he had some other gentleman sitting with him in the room. He said, what did you get to understand? I said, sir, we can do this, falana, dikana, ye sab karenge, very good. So the person sitting in the room was a CEO of a MNC bank. So our big man turned out to him and said, how difficult it is for you to put up a branch in Varanasi, Mr. X? So that guy gave me illustrative saying that, no, ye nahi ho sakta, this is a problem. Then it turned out to me and said, whatever we can do as a strength in India, if you think I can replicate it overseas, you are not doing the right thing. Because whenever you're going to put up a branch, you're not putting up a branch in Singapore, you're putting up a bank in Singapore. Do you know the credit risk? Do you know the thing? Do you know what is the regulator wanting from you, and so on and so forth? And after that, believe me, since then we have only 6 branches. We don't have any more branches.
No, but this is insightful. He's right. It's not a branch, it's a bank. Yes,
So,
in the local.
but the M put up a branch in Varanasi, a headache. It's right there.
Very interesting. So, thank you, Sampath. I'll just go to the audience questions. I'm just asking Sankalpo. He's been running some polls through and through. Sankalpo, any interesting insights? Can't hear you.
I missed.
We've got a couple of them. So this is question, and as an investor in non-urban centers, what are the challenges? Was the question I asked. About 85% feel knowledge or awareness of products or in general knowledge or awareness is one of the biggest challenges, followed by 14% people saying quality advice of products. So that is something which I am taking back from this. A couple of other polls that we ran. So I'll just get the results. Okay, so how likely am I to shift my maturing FD to MFs? Okay, about about 40% said moderately likely. Okay, around 25% said very likely. That is how the people on the call today feel. Another interesting thing was asked while we were discussing the fintech part or the technology part. I asked, fintech has changed what? And the options were availability of product, ease of execution, better services, or others, just general. So most people feel that the execution has become, easier with fintech than anything else. So these are just few insights. And another interesting thing was the question: technology has greater leverage in Bharat compared to India. Most people feel yes. The leverage of technology has more use in Bharat compared to the urban demographics. So yeah, these are the polls.
Wonderful. Sampath, before I just talk to you some audience questions, I'm pruning. There have been some which have come to me directly through Twitter, on email. There are some which are here. I'm going to just take 3 of them. But before that, my fund manager, Kashyap Zaveri, who works with Sachin, has asked me to convey to you that PayZapp is one of the most wonderful things he's encountered. He always keeps talking about you, and I keep ribbing him that I don't know whether he's looking for me or whether he's looking for HDFC Bank. So PayZapp is his favorite. He always keeps coming back and telling me about how HDFC Bank gives an offer. So, I think it's going to be a fanboy moment when I make him meet you one of these days. So 3 things which have come through. One is on the chat box here. Sneha Sharma is asking, how does HDFC Bank manage to contain NPAs while giving loans to farmers in the background of Government of India's mandate and regulations regarding farm loans? I know this is not exactly what we've been discussing, and you could choose to not answer this, but I thought since Sneha has asked this question twice, I should just put it across.
No, I would not answer this because our results are going to come out and we are shut period, so that won't.
Wonderful, no problem. So sorry, Sneha, really can't take that. 2 questions which have come to me. Sorry. Can't hear you. Sampath can't hear you.
No, so though I'm not answering here, Snail here, I think can invest or post our results and he can be answered much better.
Wonderful. So 2 questions which have come to me directly. One is from Anand Jain, and he says that digital seems to be equal to English everywhere, especially when you're talking about Bharat. Do you use multilingual channels to communicate with customers, or is it just English everywhere? I thought that was a very interesting question.
So currently languages, one is English and Hindi, and by another 6 months time we'll be moving to 11 apps. Very nice, British.
Sorry, I missed the last part, Sampath. You said 7 languages. Uske baad
No. Hindi. We will be migrating to 11 languages in the next 11 languages.
Wonderful. This is a very interesting question again. Gaurav Sharma asked this question. How do you service non-tech background people? You're talking about digital, and he specifically asked about senior citizens. Not every senior citizen is tech savvy. So non-tech savvy is a segment and senior citizen is a sub-segment. How does an institution like yours, as a proxy for everybody who runs these immensely impressive digital initiatives, how do you take care of this thing?
So, good question that is. Firstly, if it is a senior citizen, we technically, as I told you in the beginning, I do a complete risk appetite assessment of the customer. I would not on my own go and tell the customer that, sir, break your fixed deposit and move towards any riskier asset classes. For any sale of investment products in my bank to a senior citizen, there is a ratification required from the supervisor. But yes, we keep them informed. And as I told you guys that 95 to 96% of my transactions are digital. The residuals are pertaining to this 4 or 5%, which people still want to do the methodology of old theories.
Wonderful. So I think these are the 3 questions. In the interest of time, we've already touched 75 minutes of conversation. Thank you. So thank you to everybody for your questions, for your patience. I think we've had a very interesting session. Thank you so much, Sampath. I, for one, really enjoyed, and I think I speak for everybody here. This discussion, I think, can go on for another 3 hours, and we can have a lot of interesting insights. So I don't know about Sachin, but I'm going to catch up with you over a beer and have a discussion with you.
Thank you.
Thank you very much,
Thank you so
Vikas,
much.
for thank you for recording this. And this initiative you also need financial inclusion. Wonderful you guys doing. Once again, for all the other people who are the audience, simple request: stay safe. Please have the vaccination done because you getting vaccinated helps the other people. We don't know whether the third wave will exist, come or go, but let's not take any second chances. Stay safe, serve the public, increase more financial literacy in the system. Thank you very much.
Even to that. Thank you so much, Sampath.
Thank you.
so much.
Thank you very
Thank you,
much.
everyone.
Thank you, everyone. Bye.